Can you explain to me, when a buyer comes to you to be pre-approved, what sort of documentation do you need to have in order to be able to fully pre-approve them?
So with documentation, we generally get the client's information. We have a form that they would fill out, just allowing us to basically get the information first of all. Once we get their information and we learn more about them, then we can tell them exactly what documents are going to be needed, because sometimes the documents will vary from one situation to another, especially when it revolves around income. So if somebody is on a salary, straight salaried income, then it's generally a pay stub and an employment letter and possibly a previous year's T4 that the bank would ask for. If somebody is self-employed, for example, then they might require, the bank might require 2 years of tax returns and 2 years of notice of assessments, and depending on the situation, that might be it, or there might be a few other things. If it's somebody that's on an hourly wage, if it's a guaranteed number of hours a week, then it's generally a pay stub and an employment letter and a T4, and that's normally fine. If it's not guaranteed hours and somebody's on an hourly wage but it's fluctuating hours, then often the banks will want to see a 2-year average of that income. So in that case, they would likely require 2 years of T4s or notice of assessments to substantiate or to prove that income. So generally, documents required are proof of income, again depending on the client's income structure, and then there's things like proof of down payment. We just need to show the bank where the money's coming from for the down payment, and then any documentation with regards to the purchase itself, so purchase agreements and listings and that kind of thing.
Great, thank you.